Welcome back to Winning on Taxes, and we're talking about how to really get a temporary resolution. What is it, and why is it called a hardship status? So, a hardship status is someone that can't afford to pay back their tax debt in the near future. So, it varies by state, it varies by the IRS. The IRS is 2 years, at least 2 years, and can be much longer than 2 years. Most states are 6 to 12 months, but even then, the 12 months can extend out a bit longer depending on the state and depending how quickly they review each hardship status. So there are times that people get into a hardship status and can stay there much longer than the official time period. So one thing to be aware of: almost every state and the IRS, to protect their assets, because you're telling the IRS, I can't afford to pay, they'll do what's called a tax lien. And this is just normal part of following a hardship status. And they can file a hardship status pretty much anytime that you owe taxes. It's just a general thing out there to protect their assets. So it means that if you try to buy, sell, or refinance property, you have to deal with them first before you can do that. And they actually want you to buy, sell, and so they'll work with you, because every time you do something and they let it happen, they're more likely to get paid something. So a tax lien is just a general notice out there. It can affect you, but even if you're trying to purchase a house, work with them. You can get this straightened out, and you can still buy, sell, refinance property, etc. But you have to work with the tax lien unit. So just be aware this tax liens will be filed for hardship statuses with the IRS and state, but it doesn't show up on your record. It just affects any real property, and it has to be filed in the county where your property is located to have any effect. So taking a step back, hardship status with the IRS, it's at least 2 years. Does it always last for 2 years? No. Just like any resolution, if you owe again while you're in an offer and compromise, it's 5 years after an offer and compromise, you can't owe again. If you're in an installment agreement and you owe again, or if you get put in a hardship status and you owe taxes again and don't pay it when you file your taxes, it can default any status that you're in and put you right back to square one. So that's why it's so important to not owe. Remember the two things we talked about: filing compliance, payment compliance. You have to continue to file your tax returns and continue to pay your future taxes. So in 2025, every month that comes up, you need to make those payments. You need to stay on top of it and address these things. So that's why it's so important to do the basics: filing compliance, payment compliance, and then we can put you in all kinds of great resolutions to take care of you and your family. One of the questions I wanted to ask, and this comes up a lot: what if I have assets? I might not qualify. And there are some times that if people have assets, I mean, if you owe $15,000 and you have $60,000 sitting in the bank account, why can't you pay it? I have had cases where there was a legitimate reason for the money. One case, this is an extreme case, but this gentleman, he was a businessman, and he traveled all over the world. And in Central America, he caught some weird disease that killed his liver, and he had to have a liver transplant. So when we started the case, he had around $80,000. I was able to show the IRS that that money was going, because he had to spend it all before he could get on Medicare and Medi-Cal and get taken care of. So before the government would step in. And so he was spending his money trying to stay alive. And we were able to get him in a hardship status, even though he still had a substantial amount of money in his account, because we had to sell the story. We had to explain why this was going on. There's plenty of times that people have assets. I was talking on a case this morning where it was a gal that was making really good money for many years. She got a retail job because her health is going bad. She had some eye issues, and her income for 2024 has been much lower. And so we tried to get her in a hardship status with the state of California. They saw that there were assets in her bank account. Well, you need to explain this. We did. We're moving forward with the case. So again, just because you have assets doesn't mean you can't get into a non-collectible status. especially if it's real property, especially if it's your primary home, if it's being used as a rental, or again, if it has a mortgage against it, or you just try to sell it and or get them, you can get what's called a loan denial letter where you try to access the equity in your property. If you can't, you can't. And that's a pretty easy thing in most cases to show the IRS, look, here's my house. It has equity in it. I can't get to it right now due to my credit, my job situation, whatever. And they will leave those assets alone. Now, for most vehicles, they don't want to go after vehicles either. So we're going to continue this conversation when we get back. But don't think, I want to dispel the idea that if you have assets that you won't qualify. Many people do.